The August CPI report showed the Fed's fight against inflation certainly isn't over, with consumer prices rising 3.7% year on year. Gas prices are largely behind that jump, with prices spiking nearly 11%. Let's bring in Yahoo Finance's Josh Schafer to discuss more. I guess the counter argument to that, Josh, would be, well, the Fed looks at core, not necessarily the headline number.
The Fed does look at core, Kiko, and so that's normally what we focus on. But I've been sort of struck by the gas price increase and what that means for headlines. So what I'm sitting next to right now is that headline inflation number, the overall CPI number, where you can see we had our nice little uptick over the last 2 months, coming up to 3.7% over the last month. And then when you take a look at gas prices, you can, or oil prices rather, and how that translates to gas prices, you can see a similar uptick in what that means. And so what we've been looking at is what gas prices actually mean for the fight against inflation and what economists have to say about that. So Morgan Stanley said this could actually be a positive overall in the fight against inflation, specifically for the Fed. And here's why. So if you take a look at how gas prices pass through core CPI versus overall CPI, the purple lines we have here is headline CPI. So gas prices over the next several months are expected to have a pretty big impact on overall CPI. Could jump as much as 35 basis points, 0.35%. But when you take a look at the impact it has on core CPI, 2 months after we see that oil price peak, it will have about a 5 basis point impact. Really, that's not that big of an impact when we think about the Fed looking at core. But why does it matter? Why is it helpful? Well, Americans spend a lot of money on gas. And one thing Jerome Powell has mentioned is we're waiting for the resilient consumer, that resilient U.S. economy, to maybe just slow down a little bit. It takes about 3 to 8 months for higher gas prices to eventually weigh on that American consumer, take part of the wallet share, and actually slow things down maybe a little bit for the economy. So economists saying right now, high gas prices might be one of the many things. We're also talking about student loans. We're talking about the potential auto strike. But you can add high gas prices to one of the things that might actually be helping the Fed in terms of slowing down the economy and not having to raise interest rates another time.
And we'll see. You would think, obviously, that it would be one of the first things to affect some of those consumer spending patterns. All right, Josh, thanks.